We're back at it with another Velocity banking video. All right, so some people have asked me in the comments on the other video, why not just put extra payments toward paying off your debt and not go into debt getting a line of credit and just paying off your debt? Well, if you had enough money to pay off your debt, then how come you didn't do it? This is the reason why Velocity banking, it makes sense to pay off things in a quicker way because it saves you interest. This is what I'm gonna do. I'm gonna break it down, all right? Let's say you got two credit cards. One is $10,000 at 28% interest, and the minimum payment is $233 a month. Then you got another credit card. It's $9,000 at 30% interest, and it's $255 a month. So the minimum payment on these cards is $458 a month. Like, that's insanity, okay? So what do? Let's say your income's $10,000, let's say your expenses are $5,300, and you have $4,700 extra at the end of the month. You could say, okay, I'm gonna get out of debt for real, and use my leftover money at the end of the month and put it toward paying off this debt. Okay, you could do that. If you put your little extra money, well, it's a lot of extra money, let's be real. $4,700 a month is good money. If you put it toward your $19,000 of debt, you would get out of debt in about 5 months, but you would have paid $1,216 in interest, right? Yeah, you're paying down your debt, but these interest rates are super high. Now, let me show you the Velocity banking way to do this that will save you money. If you got a line of credit, and let's say your line of credit, you put $19,000, let's say it's $19,000, your line of credit, right? You move your balances from these credit cards to the line of credit. What I mean by that is when you open your line of credit, you transfer $19,000 to your checking account, and your checking account pays off these two credit cards in full, right? You pay them off completely, right? So then you're only paying the line of credit, which is 14.25%, right? So this is all gone. Now you're just paying your line of credit. That's the only debt you have. You put all of your income in. Remember, you make $10,000 a month, or you wish you made $10,000 a month. You put it in, right? You put in all of your income, right? That brings the balance to $9,000. Then you have expenses at the end of the month. You put in your expenses, and then you have a little bit of interest on this $19,000 balance, right? So your income goes in, expenses and interest go out, and that brings your balance to $14,526. All right, so you're in month one. In month one, you brought down your balance from $19,000 to $14,526. In month one over here, you just put your little extra money and got down to $14,758. So you going down quicker with Velocity banking than this over here. Let's keep it going. So month two, what do? Put in your income, all of your income. Don't be scrapping around. Put all your income in, right? Then you take out your expenses, your rent, your insurance, everything, light bill, car note, all your expenses go out of the line of credit. And then you get charged a little bit of interest, and then your balance is less than $10,000 in 2 months. In 2 months. So you keep doing this. Income goes in, expenses go out. Income goes in, expenses go out. You keep doing this, and at the same time frame, 5 months, see, it would have taken you 5 months to put your little extra money toward it. In 5 months, not only will you have paid this down to zero, you would have an extra almost $4,000 at the end of the month. Bonus money, vacation money, congratulations money. And on top of that, doing it the Velocity banking way, you only paid $590 in interest. See, if you would have just put your extra money in payments doing it the regular way, you would have paid $1,216 in interest. Doing it the Velocity banking way, you only paid less than $600 in interest. You saved yourself over $600 doing it the Velocity banking way. And you don't have to do this with a line of credit. You can do this with a 0% interest credit card if you want to, or a credit card with a fairly low interest rate. It doesn't have to be a line of credit. It could be a 0% balance transfer credit card if you want to. You can do this with a credit card. So this is why it's important to learn how to do velocity banking. All it is all of your income goes in to a line of credit, whether that's an actual line of credit or a credit card with 0% interest or something like that. Put all your income in, take all your expenses out. You pay a little bit of interest. Put all your income in, take all your expenses out, you pay a little interest until it's paid down to zero. Sometimes it's much faster and you pay less in interest. Don't let these banks take your money.